Should we at least be a little bit more encouraged that, inflation is becoming a little bit more predictable in the U.S.?
Yeah, and I think so. And I think when you look at some of the components, the Fed have said they want to look at the ex-shelter, services ex-shelter, it's coming down. It's kind of at some of the lowest levels that we've seen for a while. And if you look at some of the 3-month or the 6-month moving averages of those prints, they're in line with the Fed's mandate. So yes, definitely, I think there's encouragement. We're heading in the right direction, and that's what the market was telling us yesterday.
There's a brigade of speakers out of the Fed these next 7 days. Do you think they'll push back at this running with hope that we'll get a cut this year?
I think they will. I think they want to keep the optionality there. I mean, their dot plots are basically saying they're at the level they expect to be towards the end of the year, and I think they're going to be saying, hold on, we've got this sort of dual mandate, which is price stability, and you can argue that's coming down. There's also the employment mandate, and we all saw last week that the employment picture in the US still looks pretty decent as well. So I think for the time being, at least, they are going to push back and say that for now they're happy. Okay. I think the pause is in play, but I don't even think they're going to. I think they will actually want to keep the optionality there for possible moves later. I don't think they're going to do that, but I think as a Federal Reserve member, you probably do want to keep that available.
And is the only way to kind of re-steepen the yield curve now? Is it really only rate cuts that could do so? I mean, can we continue to kind of do something in terms of trading around that sort of theme, that re-steepening theme now?
Yeah, I think our view is that the curve should be steeper and will move steeper, but ultimately you do need to see the rate cuts come through for that to work out.
What in this Treasury rally do I chase, if any, still at this point?
I think you want to have on steepening bias. I think you want to be looking just looking at where fixed income yields are and looking at the opportunity you have there. Right. So we're at generational kind of record yields. We haven't had this for 15 years, really, since the financial crisis. Yeah. And although we've had this pretty decent rally, and although there are a number of cuts already priced in later this year, it still feels to me that the kind of upside-downside risk is towards lower yields. Yes, we could yields could move a little bit higher if the data improves, but I definitely think over the next year or so the trajectory is for lower yields and for bonds to do pretty well.
Can we say the same thing for Europe?
Europe is in a trickier situation because you haven't seen such good news yet on inflation. Yeah. We've just recently had a core inflation print which is possibly showing we've peaked. I guess we'll find out more over the coming months, but they still have a much more challenging inflation environment. They obviously, as the ECB, they started later. They haven't raised as much, and you've got Christine Lagarde out, just yesterday saying there's still more to be done, and I think we'll see a bit more from the Bank of England today. I think it is a different dynamic in Europe to what's going on in the US. The US is definitely leading the way, as they did on the way up. They're now leading the way on the way down. Right.
Let's do the Bank of England, since you mentioned it too. So I think gilt yields, the 10-year has been, 3.8, 3.9, been testing that. I mean, have we seen the highs, or do you see that going above 4%, given just what they might do, the Bank of England?
Yeah, no, we always break down sort of the market into the fundamentals, the quantitatives, and the technical aspect. Yeah. And the fundamentals still don't look particularly great for gilt yields, just given where inflation is. Technicals, there's not a huge amount of demand, I don't think, overseas for gilts. But the valuation argument is starting to come into its own, because it's becoming the highest yielding out of the major markets. So for us, we do think there's an opportunity there. I think the Bank of England will go today. But again, there's going to be question marks if they can continue going if you do start to see cracks in the economy. But similar to the ECB, they've got a much more sort of challenging environment to really cement a pause in than the Federal Reserve has.